We should talk about India, because I don't know whether it's fair to look at the performance yesterday and today in a discrete sense, as two separate events, whether we should really sort of put them together. But we're still in that working out what happened with the election phase. Yesterday stocks went up, today they drop in fine fashion.
Yeah, absolutely. I think you're right that we have to view it all as kind of one session on the week, and it's still evolving. We're still, waiting for a final confirmation of how all the results will break down. But I have to say, this price action is very worrying for India. And it is fair that we did acknowledge this. Ven Ram did an excellent piece yesterday on the exit polls that Indian stocks were priced for perfection, were priced extremely optimistically, and therefore it was hard to see upside in the short term. And I think that given the technical damage out there, there could be more pain ahead on a relative basis for Indian stocks for some time to come. Look, the long-term structural story is wonderful for India. It is a great growth story, and it's real growth and nominal growth. The demographics are wonderful. There is likely to be at least policy continuity, even if it's not the majority that Modi wanted. And it's a good story overall, but it's a story that's been so overpriced. So I think we could have several weeks of disappointment for Indian stocks, even if the long-term story is valid. I'm not sure if bonds suffer for long because of the Indian bond inclusion, the JP Morgan EM index. I think Indian bonds will probably do okay, and I think the Indian rupee will stay stable. But I think it's equities where there might be some sustained pain for a little while.
OK, so we'll keep watching that one. Of course, emerging market risk, something we'll continue to talk about. More on that in a moment. But I just wanted to get to the wider market stories. And it looks as if the European session could be a little bit softer, looking at that US data from yesterday, that ISM print perhaps. But also we've got commodities under pressure. And yesterday, after the start of the European session, it seemed that the market came round to this sort of bearish interpretation of what OPEC Plus did at the weekend.
Yeah, and I think this kind of feeds into, there's a little bit of a new disinflationary narrative that kind of creeping back in again, particularly in the US, this idea that, hey, growth's slowing down. The consumer is weak in the US. Growth's not as strong as we wanted. That might let the Fed justify the rate cut. Also, see if the jobs report comes through this week. So I think that's more interesting. The commodities coming lower, particularly oil prices coming lower, help that narrative a little bit and will help bonds do okay for a while.